It's okay to be an optimist, but it's even better to be a realist. I hope anybody that's followed me for years, you know that. Hey, look, I am not a doom and gloomer. I have my money at risk in the markets. One of my subscribers, he does this for his own family. He trades the stock market. And the stock market, you know, with the latest rally we've had in the stock market, do you know where it's up to today? It's up to, I think it's 1999 values. So we've only gone back, we're 12 years with zero returns. Well, this guy that I get signals for, and I've followed him now for 4 years, and I said that's good enough for me. I'll go all in on your signals. He's earned my confidence, and I'm not an easy person to impress, believe me. So we're long bonds right now, but in the last 12 years, he's made 900% on his money, and the biggest drawdown was 13%. That's what convinced me. If I find people that are good, just like I know a lot of you people think that my information's really good, I'll act on it. I'm not afraid to move money in. So I mean, I just pushed all in, so I'm long bonds right now. We haven't made any money in about the last, probably about the last 9 months, but I know that eventually, because these trends have started, then they've stopped. There's only two really good trends. One's been the bonds, one's been gold. And I don't trust the stock market, even though we will go in the stock market. We'll go into that too. But you find somebody that has good information and you act on it. So you got to be a realist. You got to take calculated odds, everybody. State of the U.S. housing market today. Falling demand, growing supply. When the $8,000 tax credit expired, home buyer demand plunged. Okay, this shows you right here that all of a sudden, you know, after the peak of the market, U.S. housing market all over the country, even all over the world, you know, peaked out in 2006. All of a sudden we had this big peak upwards here, and all of a sudden we had a collapse. This here was what was the original $8,000 tax credit, where the government was given, you know, essentially giving people $8,000 to buy a house, and with FHA financing, which is now about 50% of the market, that covered the down payment. Because I have a lot of contacts in the business, and they go, Bob, here's how they're doing this thing. You know, you can get that money almost immediately. A friend will loan you $8,000, and the government will write you a check 2 or 3 months later. You're covered. Now you own a house. But after they discontinued this, look at the fall off in demand. And here, after the April 30th expiration, look at the fall off in demand. Existing home sales are still near their lows. So even with this latest, this was the drop right here. We've never seen this kind of drop after the expiration of the latest tax credits, and we've had this kind of rebound right here. But right now, ladies and gentlemen, this demand is still really, really low. So it comes down to what's the next trick the government's going to pull out of the hat? As I'm going to show you, we have a real problem in this country deciding how to allocate capital in these markets, because with all the government interference and intervention, price discovery is real difficult nowadays. You can't trust markets, because these markets, they used to be you could rely on markets to give you guidance as far as what to do, right? It was the voice of the market. Not anymore. Now all of a sudden you got to try to stay ahead of the government. What are these guys going to do? Can you do it? I think you can do it. I'm going to share a strategy with you on this. But I'll tell you, you've got to be active and you've got to be smart. Elevated supply does not bode well for housing markets, okay? Look at this. Right now we have about 11.8 months of supply of existing homes in the United States. Average going back, for the last, 6 is about average. So we are way up there, folks. So not only is demand falling, but supply is increasing right now. Housing units for sale. Right now we have almost almost 4 million housing markets for sale. Inventory for sale is 4 million. Average inventory going back, the last 10 years is 2.9. So there's a lot of homes out there for sale right now. And these are the homes that are on the market. I'm going to show you some staggering things about what's coming, what's going to hit this market that nobody wants to talk about.
Is that only in California?
Pardon?
Is that only in California?
This is in the United States. This is in the United States. And that's a great question, because I want to look at things on a macro basis, because it's easier for me to get information on a macro basis than individual micro basis. I follow 17 markets, and inventory. I don't have accurate inventory information for all the markets, but I do. This is true for the United States right now. Foreclosure trends back on the rise. Last issue of my timing letter, I talked about this. Here we have all of a sudden foreclosures. Foreclosures were starting, took this big rise up, and then for about 3 or 4 months, they took a dip down. Everybody goes, wow, that's a good sign, right? They're heading back up again. They're heading back up again. Last two months. In fact, what you'll find, what's really interesting, the best way to look at statistics, you guys know, I hope you know, is to look at things on a year-over-year basis, not month to month. Month to month is like, that's just market noise. You got to look at year over year. What's interesting here, really interesting, is on a year-over-year basis, the number of foreclosures has never had a negative number to it. In other words, year over year, the trend hasn't changed.